The Big Ten is making a massive move that could change college athletics forever. Reports say the conference is finalizing a $2.4 billion capital investment deal with a California pension fund, even as two of its biggest brands, Michigan and USC, voice strong objections. But it looks like the Big Ten isn't waiting for anyone's approval. According to Yahoo's Ross Dellinger, the conference has already told both schools it plans to move forward. Messages were sent directly to Michigan and USC, along with a proposed deadline for their decisions. If they refuse to join, they could lose out on hundreds of millions in additional funding and even risk their long-term status in the league once the current grant of rights agreement expires in 2036. A formal vote is expected before the end of November, and conference officials are confident the measure will pass. If the deal is approved, each Big Ten school would receive around $135 million in upfront payments. Michigan and USC would still have a short grace period to opt in later if they decide to join, giving them another chance to receive the full benefits. The money would come from the University of California pension system, a financial powerhouse managing roughly $190 billion in assets. UC Investments oversees retirement funds and endowments across the university system but operates separately from the schools themselves. Under this plan, the pension fund would buy a 10% ownership stake in the Big Ten's new business division, known as Big Ten Enterprises. The deal would also extend the conference's grant of rights agreement by an additional decade, locking schools into long-term stability and revenue sharing. The Big Ten has been quietly exploring private investment opportunities for more than a year, and this appears to be the breakthrough moment. The partnership would inject unprecedented capital into the conference, supporting media ventures, new facilities, and potential expansion down the road. But not everyone sees it as progress. Critics argue that bringing private investors into college sports could shift the focus away from education and competition, turning athletic conferences into corporate enterprises. Still, supporters believe this is the future, an innovative way to secure financial power in an era when TV contracts, streaming rights, and realignment dominate the landscape. As the vote approaches, all eyes are on Michigan and USC. Will they join the movement or stand apart? Either way, the Big Ten is ready to step into a new financial era, and the rest of college football will soon feel the ripple effects.